Good evening, everybody, and welcome to another edition of Live Market Analysis. It's a pleasure to be joining you on a Monday evening to talk markets. The agenda for this evening is to get to all of your questions, of course, and see where markets may or may not be going. We'll do that, of course, after we talk about the disclaimer, which says that everything we're going to discuss is general in nature, has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this general information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. It's important that you remember that trading and investing is risky. You could lose money. You're probably going to lose money at some stage. It's always you who's responsible for the stuff you do and not I. For today, as I said, we'll get your portfolio questions answered. It could be anything from the world of stocks, indices, crypto, commodities, foreign exchange, basically anything I can get a chart on. I'll give you my opinion, but preferably to help me do that, you'll give me the ticker and the market, or the market, and in capital letters, please, all caps, the type of setup. So it could be continuation, turnaround, aggressive, or a combination of those factors, as we know, and whether you're looking to add risk, maintain risk, or reduce risk. So what are you actually doing with it? So I don't go off into a 1 hour case study on something that's not relevant to you, and what key levels potentially that you're watching. Okay, while you're getting those requests sorted out, we're going to head over to the AMI broker screen and kick off with our portfolio management model, which starting off with the Nasdaq has gone back to half R. Frustrating, not frustrating in that the market's gone back up. That's a wonderful thing. I'd much rather have a low volatility bull market than a high volatility bear market, because when the market's good over here, as you can see, it tends to be low volatility, and let me assure you, when it's bad, it tends to be much higher volatility. It's harder to trade for trend traders. I mean, look at that over there. And we started to get a little bit of volatility creeping in, capital V, in terms of this V-shaped rally. And they're the hardest ones for trend followers like me to navigate, unfortunately, when you get such a clear signal. And this is not me apologising, this is just me helping you understand how the methodology that you might be using now yourself works. You get a big black candle signal like that, lower peaks and lower troughs, taking out some decent demand from the past, and you've got no other choice but to draw the conclusion that the supply side is in control, at least the short-term price, and therefore, for me, that means moving to a very conservative risk setting. It was 1/3. And then that day there, certainly not a huge demand side showing at all, but emphatic, and pretty strong. And then in a shortened trading session on Friday, the supply side has completely evaporated. They are just not participating at all at the moment. You can see volume diminishing substantially. So you've got some buying in the system, and it's motivated because it's paying higher and higher prices, and the supply has just taken a rain check, potentially until we see higher prices back in 23,570 and 24,02. And we'll know when supplies arrives because we're going to see it in the volume. And that's the one thing that I'm still concerned about, is I'm not so convinced that the supply is just completely evaporated into thin air and it doesn't exist anymore. It's possibly milking this rally for what it could get. It'll see some demand come in, maybe some good news that'll stimulate some demand to come in, some size, and then they might hit that, and you'll see with that demand coming in, maybe a little bit of good news, lots of demand, then lots of supply hits. You have to get lots of volume. And the candlestick on that day, if it's a big black one, if it's an upward pointing shadow, long upward pointing shadow, it'll tell us that the supply, which I'm still concerned is in the system, has arrived. If we don't see it, that's good too. You'll just see the candles just keep going back up, and we'll have to keep increasing our risk bucket level. So that's what it is. That's what I'm worried about, and we'll see what we get. And I don't know what's going to happen next, but if we take the ASX 200 today, maybe a little bit of an indication. We see the volume is pretty pathetic there as well. And it's this time of the year, so it's not that, traders don't want to be involved. It's just, the traders are just less likely to be involved now anyway. Today's candle is, I was going to use the word decisive, but it's still small, isn't it? But it's coming in. What makes it more decisive is where it's occurring. So right in that long-term uptrend ribbon, which we know when you get beneath it, we've seen so many times, so many turnaround setups you've seen. I don't need to convince you of this, that we tend to see reversals there. okay, bearish reversals if the candles come. And then the short-term trend ribbon also potentially acting as a zone of dynamic supply now, because it acted as a zone of dynamic demand on the way up. What else is it going to do? Lower peaks and lower troughs, and still ultimately a predominance of supply-side candles. And in today's evening wrap, I did the ticks and the crosses, didn't I? I'm really enjoying that methodology, that checklist methodology, because I think it just sums my way of doing things up so well. It is a methodology. And we can see from the number of ticks and crosses pretty much what the MOTN comes out to be the more often than not. I'm 1/3 here. No, I don't see any reason to change that at this point in time. Let us go around the grounds there to see if there's another market out there that might push us off this idea of half risk in the US and only 1/3 risk in Australia. The Russell 2000, there's your V-shaped, isn't it? We talked about the V-shaped on the Nasdaq, but actually it was more pronounced here in small capitalisation stocks. Still very, very low volume. But I wonder, I mean, this volume's been rising. We had a really strong second half of September, really strong October, and that's brought the volume up. But, if we go back to the end of the year, actually December was actually a really solid solid month of trading last year, but we had some stuff going on, as you can see up there, probably US election related, to be fair. Maybe that's why there was a bit more volume. But this doesn't surprise me at this time of the year. But the Russell 2000 has surprised me with its very, very solid rally. You've got, the train tracks there, the two train rails side by side, opposite colours, and then some very powerful candles to take us pretty much back up to those recent highs. So that would indicate potentially having more risk than less risk. Where else should we go? Let's go to Europe. And this is more on the side of caution, isn't it? So far from decisive in France, in Germany, Euro stocks overall. Even the FTSE looking substantially less decisive than it was not that long ago. The Spanish market's still very strong. In Asia, indecision, strong. Indecision. We are certainly not seeing that coordinated growth that we'd like to see around this time of the year to give us confidence that this typically seasonal time is going to deliver what we'd expect, which is a Santa Claus rally. Looking at some of the ASX indices here, which sectors are the fund managers favouring over others? I don't think it's consumer discretionary, quite the opposite. Energy's neither here nor there. Interesting, it was up today with resources while all the other stuff was down. This is part of the other stuff now. I kind of called that in Friday's evening wrap, I think it was, where I just kind of couldn't, obviously broken down beneath the long-term trend ribbon. There's some dividends in there, so we really should use our imagination and push it back up. And I don't know, maybe there's a couple hundred points in it. But just this peak formed on Friday, and for me that was enough to say, you know what, I just don't think this is in the wrong basket. This is in the rotating out of basket sector now, rather than rotating into basket, which it was in for a very long period of time. And we saw a decent follow through today. So that one's starting to concern me. Gold sector still very strong. Healthcare, I don't think ever got out of the rotate out of basket. Neither has technology, even though that's a decent rally, to be fair. Material sectors, I said resources, definitely still one of the rotate into sectors. But if everything starts coming off, even that will have to succumb. Real estate, I think, in the role that you're rotating outside of sectors. Nothing going on staples. Telecommunications, definitely in the rotating outside of things, and nothing on utilities. So just, I think, gives us a bit of an idea where or where not to have our capital invested locally. Let us head over to the base metals, and I think indecision. Can I say indecision there on aluminium after looking very decisive? Copper still looks very, very strong. Iron ore looks okay. Nickel still looks terrible. Lead has got itself back beneath the long-term trend ribbon. Wow. How good does tin look, ladies and gentlemen? I haven't looked at that chart since last week, and it looks amazing. And zinc, I think, still looks pretty good. So copper, tin, zinc, still, I think, the places to be. Lithium, carbonate here looks okay. But yeah, it looks fine. We've got some really strong motive phases. Yes, we've got some lower peaks coming in. Yes, we've got some candles at those lower peaks that would indicate, some excess supply lurking in that system around 100,000. It's a very natural, normal place for it to lurk, isn't it? But the demand side, I think, still reasonably strong at this stage. Obviously, we don't want to see it close beneath that 92. That would put us back into the medium-term downtrend there, or at least the price action medium-term downtrend. And we'd have a date with the short-term uptrend. As long as that holds, I think we're okay. Bottom line is, I think we're okay, but monitoring. And that's it. Let's head over to the trading view screen, where I'll come back and talk about that one in a second. Chart kind of gives it away. Silver, somebody said hi-ho silver. I think Peter said that, and indeed it's looking very, very strong at this point in time. But we are going to interact now with a pretty key level, 14.5 odd year high at 59.02. And then if we drag down, and go a little bit further, we're going to see that next level, which is the 67.31 high from the 21st of January 1980. That's the big one. Above that, silver is officially back into blue sky. And I wonder if that was one of the times that the silver market got cornered, or was attempted to be cornered at the time. I can't remember. I don't know if I was about 3 years old at the time. But that looks like a picture of demand side control today, doesn't it? Huge white candles, very steep in the price action there, short-term and long-term uptrend ribbons, and they seem to be doing a pretty good job of supporting price at this stage. Hey, we need to see what the candles tell us as about that potential supply, that late supply that might be doing, sort of just in the market there, flittering around 59.02. Now, is it possible that there are traders from 59.02 14 years ago that have been waiting at that level to get out? I doubt it. I very, very much doubt that's the case. But it's more just a level that the market might show a bit of trepidation into, and therefore, withhold a bit of demand until we get past it. Once we get past it, then demand may well come in and interact in a more powerful way. Gold, I think, still looks very, very strong, much stronger certainly than it did last week. And if we can close above 42.87, then probably 44.33 is going to be formality. If some of these numbers look different from last week, it's because there was a contract roll, and through the back adjusting process, some of these prices have changed. It's all about where the levels are that matter. The price is almost irrelevant in itself. Futures traders aren't going to be focusing on what the old price was. They're going to be focusing on what the back adjusted price is, the actual level. So that's all we need to worry about here. We said that copper is looking pretty good. It's also starting to challenge some of those higher supply zones on high-grade copper in the US, and we said iron ore, okay, and actually getting some confirmation there. That's actually looking pretty interesting. If we zoom out to the weekly chart, well, we can't see anything. It's just the way trading view works with all the stuff that's on there, but maybe if I do some stuff with it, we can get a better idea that if we actually can close sort of above 105-ish, then there's a few levels, and you can see how the back adjusting changes the prices, and then I just go in and just click back on the levels, and I double click there, and just helping you in terms of maybe you might want to do this as well on your charts. It's a very manual process for me. If you're wondering how these levels come about, I actually maintain these charts. It's a little bit of a labour of love, as you could imagine, for a technical analyst. Let me correct that and say it's bloody boring, and I actually do hate it when there's a contract roll, because I've got to go through and change all my labels, and there really should be one up there as well, shouldn't there? But seeing as we're nowhere near it, we don't really need to worry about it too much. But you can see how I manage that process, and then you go back to your daily chart and double click those to get it all nice and aligned, and then I click save, and that should hold on to those values for next time. That's the how to use your trading view super chart lesson. In fact, look, there's a few here which I haven't updated yet. So you can rest assured that the next time you see iron ore in one of the Chart Watch Markets editions, it's going to have all of these properly updated. But I won't do it now, as much as I'm tempted to just finish it. I won't. We better keep moving. And where are we going to move? We might as well head all the way down there and look at Bitcoin. Because it is seemingly having some trouble getting back above the old demand zones there, 91,713 to 93,450. In theory, it should act as demand on the way down. Doesn't. It can then act as supply on the way up. Maybe that's what we're seeing, or maybe it's just the interaction with the short-term trend ribbon. Who knows? Who cares? It just is. If that ends up being a big black candle, it's going to suggest that this thing is still under a great deal of pressure, let's say. Let's go over to the bond market. and finish off our discussion by checking up on the price of money, and money continues to get more expensive here in Australia. So if you've got money sitting in a cash management account or not so much a term deposit, but maybe one that's coming due in the not too distant future, you're probably going to get a pretty decent rate on that renewal there. 2-year rate now up to 380, and the 10-year rate up to 455. That's getting up there, isn't it? If we look at where it's been over the last 18 months or so. What about a little bit longer term than that? Yep, starting to hurt a little bit, one would say. And it's going to be tough for the Australian share market to overcome something like that if that keeps climbing. So ultimately, if this is getting more attractive, because it's a risk-free asset, right? 10 years, lock your money away and get 4.55% per annum. That actually doesn't sound too bad, doesn't it, when you think about it, compared to the same dividend yield. In fact, the dividend yield on the Australian market used to be about 4.5%, but that was about 5 to 10 years ago. Now it's closer to 4% and maybe a little bit less. And that's not risk-free. That is a giant ball of risk. But what you get rewarded with for that giant ball of risk is the possibility that it delivers a 20% return in a year or 15%. Okay, you're not going to get that necessarily with the bond market. Certainly not if you hold to maturity. It's a capital stable product. But in the interim, 4.55, 4.6%. Wow, starting to look pretty juicy there. And stocks are going to struggle. Japanese yields are popping up as well. So we're talking about repatriation of yen there, and potentially also pulling money out of banking stocks. Well, there you go. That's the inverse Commonwealth Bank chart, isn't it? Right, the last sort of bit through here. So I haven't looked at this since last week, but that's starting to make a little bit more sense now as to what's happening with our banking sector. I probably should look at these more than once a week with you lot, because then I'll have more interesting explanations in my evening wraps, which are always a rush at the end of the day. US yields aren't falling off a cliff, but they are still coming down because the US economy, the perception there is that it is continuing to slow. But not panic stations at all there yet. So fascinating set of charts to kick us off this evening, and hopefully to provide some context for all the stuff we're about to discuss, which is your request. And I'll head to Mick, who's got HMC. Aggressive setup for HMC. Okay, I would not have thought about that. As you can see, it's still very much long-term downtrend, but that doesn't mean we can't find a long trade if we have the right set of conditions. And we do have at least some white candles, some strong demand-side candles. Did we get on the low really decisive price action, volume, volatility signal? Not really. Somewhat there, but I really would have preferred to see it on the actual low, and no, that's a no for me. In terms of price action, do we have rising peaks and rising troughs? Yep, I think so. Through there and through there, rising peaks and rising troughs, and really strong motive phase and only shallow pullback. So that's a tick, another tick. Let's get a line we can see, and maybe change those as well to lines that we can see. And then the candles, obviously, I would say are definitely predominantly demand side in nature. I know today's candle wasn't ideal. Market was down though. Do we have a short-term uptrend? Well, I do think it has. The moving average has turned up. It just hasn't turned green yet. And are we going to split hairs and say that that needs to be green first? I would like it to be green first, but at least I can see that it has turned up. And then the final flourish would be, is there a decent basing pattern? Yeah, look, I can see a month or two of basing. So, 3 months would be better. More is better, but I think that's okay. So I'm happy to give that a bit of a tick. And we just want to see then. So it all looks pretty good on the setup, okay? But we then need to address the reward to risk, because if we expect, and hey, I do, you don't have to, but if we expect that there is going to be latent supply in the long-term trend ribbon, if we expect that we could, in theory, see something like this, right? And not just like that, because, look at the trend, right? Something like that, where it actually rallies up, this rally plays out, the rallies come in, the bad news, which is so obviously, the company's so obviously beholden by, continues to roll. It just would not surprise anybody listening tonight to see the price action do exactly that, right? So if that's our concern, then we need to say, well, can I make at least 1-to-1 reward to risk if I got in at around the current price? And of course, we're not going to get in on today's candle, right? But we might get a nice white candle tomorrow and it closes above, this high here. That high is 31.91. So let's say we get a close greater than or equal to 3.92. Okay. What's our upside? It's pretty limited, isn't it? Now, I can't tell you not to do it. That's your choice. I wouldn't do it because I like to enter trades where risk reward is in my favour. So where I think my upside to the next big level where I expect supply might come in is greater than my downside. And my downside, because I'm probably, at the very least, I might get a candle signal before that, but I can't count on it. I don't know what's going to happen. But I know with absolute certainty that I'm going to take action here on a close beneath that point of demand, right? So I can deal in the things that I know. I could use the short-term trend ribbon. I could say, well, most certainly I'm going to take some off the table on a close beneath the short-term trend ribbon. That is a dynamic point of demand. And therefore, with those things in mind, knowing what I do know, yes, I get it. There might be a candle signal that gets you out earlier, but I don't know. If we work out, say, with a red candle, what my downside risk is, and then with a green candle, work out what my upside risk is, then I think my reward is substantially less than my risk. So it's not so much that, well, is this an aggressive setup or not? I guess we can make the case that all the technical analysis aspects are there, but it's going to fail on our reward to risk basis. And that's, I think, as textbook an aggressive setup as I could give you in terms of how to work it out from start to finish. Simic says HMC aggressive setup ? And I would say not for me. WTC ? Now, straight away we've potentially got some better stuff going on here, because you can see we've got a much wider distance to the long-term trend ribbon, and therefore, even with a stop down there or a stop down there, and these aren't stops, of course, these are places where we're going to manage our risk, right? Manage risk points if you prefer. Certainly it's looking on the very first pass that it'll pass the reward to risk filter, but it doesn't pass enough of the technical filters. So the other one passed all the technical filters but blew it on reward to risk. This one's quite easily going to make it on reward to risk, but where are the technical filters? So we can start with, well, there's no base pattern, and I like to see a base pattern. Give me a month, give me 2 months. Like I said, 3 months is great. Price volume volatility occurring at the low, no, that hasn't occurred. I don't think we've seen that climactic sell-off where all the supply that needs to be in the market has got into the market, and demand has come in a big way and soaked it up. I can't see that, so that's a fail. It's not a complete fail. We do have rising peaks and rising troughs through here. Is there a predominance of demand side candles? So I can see 3 of them. If I count that one, I've got 4. If I count that one and that one, I've got 5, but they're hardly demand side, are they? So, no, I don't think we have a predominance of demand side candles. Do we have a short-term uptrend? No. No. Means no. This one doesn't meet the technical criteria, so we don't even need to talk about it. Now, what's aggressive? I've defined to you what my aggressive setup is. Okay, I've given you the very, very explicit rules. You can't possibly stuff it up, I hope. But aggressive is just a word, isn't it? If you think that's a setup, knock yourself out. But you didn't get it from me. And who's to say that you won't be right? Who's to say that Wisetech won't be up here? Who's to say Wisetech isn't going to go straight through? 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3.92. 3. that downtrend ribbon. Like it doesn't exist. Who's to say? You never know. Let's go to mineral resources. Mick's saying not liking the black candles. Yeah, look, I don't like the black candles either. There's a few more of them than we'd like to see if the demand side's in control. We're also seeing lower peaks and lower troughs, but we're still holding the short-term uptrend ribbon, and that's really why it is, I was going to say, the only redeeming feature, and I'm trying to think of another one. So I think it is actually the only redeeming feature. So let's go, say, there, because it's beneath this point of demand. And I probably should draw that back a bit, shouldn't I? Let's grab that and give it a dual purpose. So showing roughly beneath the short-term trend ribbon, underneath the point of demand, and given, of course, that we are in lower peaks and lower troughs, which is here, 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 and as of today, officially, the second lower peak. We've got 2 lower troughs, and what more do you need to know, I guess? Okay, so I can already see a reason not to be full risk position already, but order of magnitude a third off the table for me. And I think just stacking the R's or the minus R's, that point of demand, short-term trend ribbon, I'm pretty comfortable going minus R on the close beneath that level there. And just saying, well, probably wasn't a terrible trade, depending on where you first got into it, probably wasn't a terrible trade. MIN. So Mick says he's thinking minus 1/3, but I think in many ways you're already there. And for me, it's the balance of the risk coming off the table there. Sonia's got ASG, and that still looks very, very strong to me. And I know we can say, oh, look, market's very nervous and I want to take all my money off the table and just watch it. No, that's up to you. I mean, that's the risk management model is there to protect us anyway, and it says you can't have more than a third, right? So if you wanted to have less than a third, you can, but at least you've got something that is unequivocal. You've got something that is mandatory is too strong a word, explicit. At least it's there. It's like you can't second guess yourself because the model is saying 1/3. So if you want to go less than a third, you can. We just can't go more than a third. Obviously, that's going to be a pretty important point of demand. Close beneath that, and I'd be concerned that the supply side is gaining control, that the demand side, which has been so strong up to this point, just so strong, is unable now to contend with the supply that is starting to impact the price action more. And the version of that impact the price action more in this case is simply pushing it sideways. That's not so bad, right? The market has been, really bad. So going sideways is actually a win. But up to a point where, it does spell equilibrium. And then from equilibrium, we could get demand side. Big white candles will come in. Or we could get supply side. We're going to see a break beneath the point of demand. And long story short, that's where I'd be looking, much like the other case study we just saw, MinRes, where I think we'd stack some R's beneath there for me, if we've got to close beneath it. Until then, quite confident that this is still equals R. There's nothing really so sinister here that would have suggested, like, so mineral resources, I said, well, in my opinion, you've already taken some off the table because we were very clearly lower peaks and lower troughs. Here we're not. So if you're unsure what the price action is, just draw it in. And I no doubt you're doing this at home. You're playing along at home. We don't have that last trough yet because it hasn't been determined. And let me just fix that up a little bit. That one there and that one there. Okay. We've got a lower peak, don't we? But we're still rising troughs. We're seeing some equilibrium come in. Why are we seeing equilibrium come in? That's why we're seeing equilibrium come in, just in the shadow of $5. It's a very normal, very natural thing to happen. Okay, that's the offline request. Let's head to your online requests. And we've got Robert saying CVV is looking for plus 1/3. Yeah, that looks very solid. Let's go to zoom normal so we can get a better picture of the overall trend. And I like this. Short-term uptrend, long-term uptrend. Very strong. Short-term uptrend ribbon supporting the price action. What I love about this, and I know the candles are sketchy, it's not the most liquid stock around. In fact, we can see the turnover filter here is at 0. So that's why you haven't seen it in any of my ChartWatch ASX scans, because I can't see it. I've got a very, very low hurdle on turnover, and it's $200,000 a day on average over the last month. Or I facilitate stocks that are more, they might not have been very active over the 3 weeks prior to this week, but at least last week they're starting to be active, and it's a high hurdle because it's just a week, 400,000, so doubling the 1 month in that last 1 week. Okay, so it's not meeting either of those, and 200 grand is not a lot of money, ladies and gentlemen. So it's not that it's not good as to why I haven't put it, it's just I haven't seen it. But if you can overcome some of those liquidity issues, and all it means is in a thinner market, less liquidity, it takes less for a motivated order to move the price to a place you don't want it to be. That's all we're talking about here. Where's the place you don't want it to be? Well, certainly not under there. We'd be reducing some risk if that was to occur. But in the meantime, this is a picture of excess demand. Equals R if you've got it, plus R if you're looking for some risk. That's my opinion. And we should always, in these cases, zoom out and just check where there are potentially major points of supply lurking in the background that might come into play. And it looks like there's one here. Not sure how we're going with it right now. Let me extend it across. We'll get a look. Actually, that's miles away, isn't it? So there's we're going to have one before that, which is probably in between these two. And extend that across, and that might be a little bit closer. It is. So, you know, it's not that we can't take the trades, we just need to think about it a little bit. And, you know, are we seeing any signs in the market? We're pretty close to it now. I mean, 27, and we're talking about 28.5, right? So are there any signs in the market that the market is worried about that level? No, it doesn't look like it. It doesn't look like it's going to be a big level there. So nothing changes there, equals R or plus R. So thank you for sharing that one with us tonight, Robert. And Robert's also got BML, which I have been keeping an eye on. That's the silver stock, Boab Metals. I'm pretty sure I put it in. Did I put it in this morning based upon Friday's candle? That should be self-evident why that would be the case. A few of these that were sort of turnaround continuations or continuation turnarounds, doesn't matter what order you put them in. I was waiting for some sort of signal here to tell me that we're not so fussed about the supply that it's probably going to be there, because that supply is still pretty raw, isn't it? It's quite recent, so probably pretty raw in the market. And lo and behold, and why did that supply occur? Well, it's 50 cents, isn't it? I mean, people got in the 20s, 50 cents, it seems like a pretty good deal to them. And today, lo and behold, did that supply come back into the market, or was there supply there, and did it interact with the market? And the answer is yes, it did. It's not the end of the world. Next candle. Let's see how we go the next candle. Demand side candle tells us that supply's gone. We've interacted with it. Did we interact with it? Yes. Look at the volume. Lots of demand, hit lots of supply. That's good. That's okay. Guess what? There's lots of demand. Big tick. Oh, but carbon and all that supply, it's okay. We've got to get through them. We've got to deal with them. They're sitting there. They got in here at 50 cents, thinking silver was going to go to $100. Here we go. You know, loading up on silver. They've got every silver stock. They've got silver ETFs loading up. And then that silver pullback, right? Boom. Ouch. Oh, no, I've got every silver stock under the sun. Oh, please, God, if you just let this one or the other ones just go back to where I got in. I mean, you know, should I buy it? No, won't buy it. Can't buy it. Oh, silver. Oh, my gosh, should I buy it? No, I can't buy it. Oh, yeah, okay, I'm in. Not everyone, but some of them, right? Some of them did that. And down here, they're thinking, oh no, I've done it again. I'm just explaining what latent supply is. Supply that is this, and are they supply down here? Are they supply? They're not. The funny thing is they're not supply here, right? They're holding on here. They're going to hold on to the day they die, because they won't take a loss They refuse to take a loss. But up here, they're not losing anymore. They're breaking even. That's latent supply. Not everybody thinks like that, but we need to trade with them. Okay. And if the demand side's strong, don't fear that big volume there. I know it's not a great candle, but we have, they're there. We know they're there. The next candle, they're going to tell the story. Would I get in based upon today's candle? No, I wouldn't. But by the same measure, it's still an equals R for me because of everything I've just said. And the next demand side candle might even be the next one after that because of this new little shadow here, but it's not far away. I mean, plus R. Try that again. Plus R on the next demand side. Next demand side candle. There we go. Okay, that'll do. That'll do on that one. Let's keep moving. What have we got here? RCM. Yeah, look, it's fairly new, obviously. So we don't have a long-term trend. We don't have a lot of price action. We don't even have a short-term uptrend just yet. Looks okay. Look, I mean, I think, Robert, I can't tick enough boxes to say plus R on that. But it's not far away. Give me some green here. Just confirm for me a little dink. That's all I need. I mean, because if we draw in the price action, what have we got? We've got that. I don't know which one is the lowest there. I can hover, can't I? Can I hover? Low 044, 044. So it doesn't matter which one we draw. This is outside, inside, downside. So it's still part of that move. Upside. So now the trough is formed. Up, and then up to there. There's no peak yet, I should say. So technically we do have rising peaks and rising troughs. Okay, so I can see we've got price action. That's okay. Yeah, okay. Look, it's very, very early. Very early. I can go equals R, obviously. Plus R. It would have to be a really solid next demand side candle, and ideally that's turned green as well. It's really early. There's only so much I can do on that one. Let's go LKE for a turnaround setup. This one's come from Michael. Michael, yes indeed. Yes, so much yes that I'm pretty sure I put it on that day. 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 I put it in on that day, and also put it on that day. So. If you're just finding this for the first time as a turnaround setup, that's okay. But clearly, there's also a few signals before that. Today's candle, a little bit of supply in the market. There's no need to go rushing into today's candle. Certainly, there's not enough in today's candle by any stretch of the imagination to suggest anything but equals R. But yeah, look, plus R on the next demand side candle. We might even get a little bit of a dink first before that occurs. But otherwise, yeah, it looks like a pretty classic, pretty typical turnaround setup. As for getting in up here, just be mindful of our proximity to this area, which I think is why perhaps we saw today's little bit of an upper shadow coming in here. Okay, maybe if you're just seeing it now for the first time as a turnaround setup, maybe you're a little bit late to the party on this one and just wanting to see a little bit of consolidation underneath that supply zone. Get a few of that. Latent supply out of the market first. Let's go to Hayden's got BB1, which is looking very, very strong, and it was one of those which wasn't on the turnover filter for a long time, and then just literally, there you go, one there, and then back to zero, and I saw it fairly recently, so maybe even not that day. I was going to say it might have been that little one there, so around here. Wouldn't have put it in on that day. I reckon that's the day there. So that's the first day I put it in, because that's the first day I could see it and that it met the criteria. I'm pretty sure I would have put it in that day. I would have put it in that day. I know I put it in that day. I know I put it in that day, and it's going in tomorrow as well. So yes, much like the last one, certainly equals R, and actually there's no impediment to this one. So this is also plus R because the last candle speaks for itself. Let's head to the weekly chart and see if there's nothing. Actually, there's nothing there because that's all the data we have. So it's fairly new. So I'm happy to hold the risk that I have on this and at risk as well. Definite continuation there. Oh, Hayden saying take some off the table today at the round number. Oh, okay, I didn't even see that. Well done. Thank you for reminding me, Hayden. Yes, the round number is relevant. It's the first time we've ever been there. So for me, it's compulsory. I have to get some out. I have to get some out. Really strong candle today. If you didn't do it today, you might want to wait one more candle, but you're splitting hairs. For me, I don't ask questions. As good as it looks, I don't ask questions. It's just my rule. I've got to get some out, even if I regret it the next few days. I'm still keeping lots, but that is my rule. Yeah. So I agree with you. Your thoughts on taking some off the table today at the $1 round number? I did sell to a third today. Well, there you go. You answered your own question. Tick. That's it. You tick the box. You scratch the itch. Now the equals R applies to you. V-shaped turnaround, no base pattern, says Michael. I'm not sure which one. Which one? Don't know. Matthew, hi Carl, good to see you. Good to be seen, Matthew. We'll do USA stocks in a little while. Perry's got Specky on the ASX, a PFE. Okay, PFE. Oh yeah, look, I can see some stuff going on there. Pantera Lithium. Oh, it's in the lithium space. I'm still interested. Let's go. No turnover filter yet, so it's still a bit quiet. Look, yeah, I can see it. I'm trying to zoom in to see whether today's volume is, and it is above average, so that's encouraging. Otherwise, yeah, it meets all the rest of the criteria for a turnaround setup. I'm not sure if this is my favourite one at this point in time, but I can see why you go for it. It doesn't look terrible. It's just, what do I want to see? You know what I want to see. I want to see sort of something a little bit more like that, and at the moment, it's still early in that process, but it is bouncing off. It is bouncing off that, so that's okay. And by this, I mean, sort of here-ish. That's the point. I'd like to get them, and I know nothing happened after that in this particular case, but that's probably more the look. This is more, I'm worried. I'm starting to look at these and go, why? Lithium sector has had such a great run. Why not this one? Why did the supply side, why were they so happy to let this thing go? But, maybe they're out. Maybe they're out. Today's decent volume, strong candle. Not one for me. So personally, no. I'm gonna keep looking elsewhere, but I can see why you might have a go at that. Where am I going to look? Some of the stuff that I'm looking at for tomorrow. Austral Resources. It's not dissimilar, actually. Interesting little segue from yours. But what this one has in its favour is this. And with the last bit of price action, you can see, it's healthier as well. That didn't work out. You get the message. So try and hit these. ASL, gap and run, BB1, we talked about it, COV. Underneath that candle is underneath that writing is a white candle. DPM, still very solid. EHL, impeccable. Nice move there. Fortescue, I think looks interesting. Havilah, MI6, gap and run, as clean as you can get. RXR, TGN, as clean as you can get. And a lot of these have been in for a while. USL is the first time in a long time. But a good gap, pull back, sort of an intraday dink, if you like. And the copper ETF pushing to a new high, then you're closing a high. Short setups, ADH, AEF, ASX, Bendigo and Adelaide Bank, Bank of Queensland. These are all good to go. This one's a little bit interesting in that it's slightly more aggressive in that I'm playing this little reversal here, but we know what this touch means. We know what this touch point is. Okay, and it could go straight back up. I don't know. There's a little bit more risk in this one because it's quite aggressive. I'm selling into the rally here, but I waited for that confirmation candle first. A little bit more aggressive. This one just didn't even rally, did it? Just didn't even get back up to the ribbon there. Computershare. Genia Communities. KPG, MPL, about to crack. MPW, geez, that flamed out, didn't it? NWL, UX, NXT. So a few of these are turnaround setups here. REA used to be a turnaround setup, so you can kind of see in some of them what I'm going for, what I'm targeting. All right, targeting is a really good word. So it's quite aggressively selling into this sort of setup here on the basis of getting the risk in early, and then the rest of the trend kind of just takes care of itself. You just ride that sucker down for a long time. R&D. Technology 1, I want to say I put it in on that day there, or both. So just aggressively targeting those setups to try and get risk in early. TPW, I want to say I put it in on that day there. Correct me if I'm wrong. Same reason. And XRO, I want to say I put it in on that day there. Certainly I put it on that day there. So plenty to do. There's plenty of risk wanting, or plenty of opportunities wanting our risk, both long and short. Pantera Minerals says, oh, okay, maybe it's changed its name. Perry's saying about the lithium company's changed its name, which I don't know. Well, it's possible that they finally gave up on lithium, right? They hung in there, and then they finally gave up on lithium. And yes, it was just the wrong time. Just at that time, they should have hung in there just another week or two. It switched to silver. Of course, it has silver and antimony. Well, you know that's a quality management team you have there. Really, Barry. Yep. I wonder what they switched from to become Pantera Lithium. Okay, whatever was hot the week before that, and then lithium became hot, and now silver and antimony. Yep. That's a bit of a red flag for me. Okay, but I don't know where fewer people here tonight. I can't even tell. Probably average amount, but not so many requests. So I'll head back up the list and then do the US ones. Actually, Andrew's just popped in there with one more, CBE, which is Cobra. This one doesn't ring a bell, so I'm guessing if we look over here, we're going to see zeros, which is frustrating. That's why I always say, just because they don't meet the turnover filter doesn't mean they're bad. It just means they don't meet the turnover filter, and if you find them, you're green light to go. You're just not going to see them from me, unfortunately. So there's lots of setups here. Not today, though. Not today. We obviously can't do anything with today's candle. It's had a decent move. I wouldn't be surprised if it throws in a few more supply candles. It just works its way back to the short-term uptrend. We'll see where it goes from there. I don't think you need to rush in. If you have it, looking to add on the next. I don't think you need to rush in on that one, Andrew. Let's see the next few candles play out. It has had a good run, and so no, it doesn't look like there's anything so sinister in the past price action around this level, is there? I mean, there's a bit up here, but that's starting to feel a bit ancient to me. A few days of consolidation, then, as you say, the next demand side candle. Okay, a few more. We'll stop at Daniel, and then we'll head back up the list. LYC. What did we say last week? Did we say? No, we said equals R last week, didn't we? Equals R. So it wasn't quite ready yet to have a crack at that turnaround setup. And look, they're higher risk, and that's why I tend to be a bit more conservative on them. So it's still a no. I'm going to guess pretty much ditto what we said last week. It just needs a bit more cooking. And look what I drew last week. So if I take that, put that there. No, it's not going to work. So it changed. Take that, put that there. Yeah, that worked. And take that and put that there. I can pretty much say, same as last week. If I start to see this sort of price action, and we start to see some decent demand side candles that tell me that point of supply is no longer a point of supply, then absolutely yes, because of this, I could entertain it. We need to be above the short-term trend ribbon. Obviously, the short-term trend ribbon, where's that going to be? It's going to be sort of here-ish, isn't it? We want to see that starting to at least converge back, at least transition to amber. So this still looks quite a bit that needs to happen there for Linus, I think, before that transitions back to an add risk in our psychology. Let's go to DVP, which is having some problems. And yeah, I would say this is much further away than Linus is. So I'm not sure, Daniel, I don't know if you didn't catch the first 3 minutes of the presentation where I show you the slide about telling me what it is you're doing with them, because you're kind of wasting my time here, pal. If this happened, if you ask me this on a Wednesday, I'll answer it because that's where all the beginners are. But here on a Monday night, tell me what sort of setup you're looking at, because I can't see any setups here, mate. Plus 1/3, minus 1/3. What are you doing? So there's two that are a little bit nonsensical. I think Mesoblast, however, we're going to get something that's going to make a bit more sense. And yeah, I don't mind this one. Certainly this candle here is a game changer for me. It puts it back on the list of add risk. It also is a nice segue from the last two we saw, where we need to see some demand side spark, something from the demand side to say we're back, and at the same time the supply side to say, okay, I don't have as much ammunition as I did last time. You know, I can see the demand's there, and I'm not just smacking it on the head as soon as I see it, like I did here. I mean, we have this pop, and look at the supply side response so far. So this is a game changer. The psychology of the market has shifted here. So this is something I could look at. I could go equals R here, and I could go next demand side candle. However, I would question, I just showed you the ones I'm interested in right now. I would question whether this would get on the list plus R next demand side candle, given the impediment that it faces from what probably will be, because it's quite fresh in the market's mind, a decent zone of supply up here. Okay, so we need to also consider, well, there's the technical aspect, the setup aspect, and then there's the reward to risk aspect. So even if we do get that next demand side candle, how does that reward to risk then compare against the other setups that I'm finding? Okay, and if it's the best, no question. For me, then it becomes absolutely go for it. If there are others that have much easier paths, or at least simpler paths, lesser paths of resistance, that's what the phrase I'm looking for, then I'd go that way. Okay, Michael slipped another one in. I'm not going to do any more after Michael. Satire for an aggressive turnaround continuation. He's got all the... he's gone, okay, Carl just gave the other guy a whole heap of stick. I'm not going to muck around here. I'm going to ask if this is an aggressive turnaround continuation, ladies and gentlemen. Is it an aggressive turnaround continuation? It's got to be one of them. It's more of a turnaround setup because we have a short-term trend ribbon is amber. We're coming from beneath it. We're trying to get above it. And this is one we've looked at a few times, and I think I actually even said plus R. Look at this, I said plus R on this candle, and I'd stand by that. That's the first point for me. It becomes a setup. But there might have been some, maybe that candle, if I squint, maybe that candle there, you could have just squeezed one in ahead of because you had everything else. Look, we had a base pattern. Look at that, 2-3 months of basing. On the low, we saw the price action signal. Price action, volatility. Actually, we didn't see price action. We saw big selling candles. The only price action, good price action was those two there. They weren't very big, but we did see volume and volatility. That climactic sell-off. We didn't see demand coming in to absorb them until a little bit later down the track. So even that's not perfect, but it's at least you can see some of the things I discussed before. And then we saw the rising peaks and rising troughs. I know I would have talked about this about 3 or 4 weeks ago or more. Probably 2 months ago, we would have talked about all these things. And then by maybe that candle there, because I'm just trying to show you that candle there, maybe we can squeeze in 1-to-1 just on the basis of under there, entry here, and then up to there. I think we would have made it. So that would have been an aggressive setup. And once we trip that and we can't make that reward to risk, we then have to wait for a close above the midpoint. We talked about that many times. And that's where we got it. It's actually here. Well, there you go. That could have been the first go. Then that's the second go. I think that I might have ran it on that day. And then it flitted out. Look at that. It flitted out. It flitted out. Hindsight says we went too early. Hindsight says, oh, I know what you did wrong there. You should have waited for the test and hold of the long-term trend ribbon. You should have waited for the trough above it. Well, that's why this is an aggressive setup. It's not a turnaround setup. It's because we haven't done that. So aggressive's more aggressive, more risk. Look at that, flitted out. The power of that long-term trend ribbon. We said we don't want to muck around with this thing. But it's having another go. Surprising me, to be fair. This is actually surprising me. I thought this was cactus again. But boom, 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 boom. Look at these candles. Boom, boom, boom. Clearly, there's some motivation among a fund or two. Okay. Today's candle setting things straight a little bit. But it's not to say this in play. Look, this is a giant steaming bowl of couldn't care less. Can I go so far as to say that? And the more I look at this, the less interested I am in it. Is that fair to say? Because why do you want to muck around? And this could go to $1.60 tomorrow. I totally agree. And maybe if it does the stuff that it finally, I've required of a turnaround setup, then I can look at it. But how much do you want to mess around with something that cannot even figure out what the frick it wants to do? And I think the answer is no, not interested. Thank you, Michael. Let's go to the US ones. Hit up the screen. Yes, I don't. On Wednesdays, I have to be very prim and proper, don't I? On Monday, I can say whatever the hell I want. Let's go to US stocks, and let's EDR. This is a TSE. Okay, yeah, that's Endeavour Silver. Hey, throw all the silver stocks you got at me. Let's look at them. Endeavour Silver looks like so many of the Aussie ones, and whether you want to go this one over one of the Aussie ones, it's fine with me. It looks the same. So there's how many more arrows do you want me to draw on the chart here? And plus R's, and look, it's fine with me. So plus R equals R. It's all good. The only thing I'll add here is, well, let's just have a quick look at the corner of our eye, and actually that looks good. Because on the weekly chart, there's nothing there. So that's giving it a big tick for me on that basis. So let me just annotate that one so we know for next time. Plus R and yes, plus R and equals R. Good. Okay, so happy with that one for you there, Peter. Now let's go to, while we're here, I know I'm going to get to yours in a second, your other one said, Peter. Let's go WPM, Wheaton Precious Metals, another big silver producer. Okay. Doesn't look as good as I thought it would look, but looks okay. Is that going to get plus R over some of the other ones? Not so sure. Look, it doesn't look terrible. HL, Hecla Mining, another big US silver producer. That looks much better. I think that looks very solid. Let's go to the weekly chart. Looks pretty good to me. Let's go to Pan American Silver, PAAS. There you go. Looking very solid, in fact. There's your signal there. We had signals earlier on this one. So, go always favour the strength is what I think. Has anybody else got any other silver ones? Throw them at me. AS1. Is that an Aussie one? It's an Aussie one. Okay. Looks okay. Looks fine. Looks more than okay. Yeah, it's maybe needs a bit more liquidity. I haven't seen that. Hasn't come up in my scans, but looks fine. Let's go FVI. Thank you, Andrew. Fortuna Mining. Yep, looks very good. No complaints. I won't write on all these. I don't think we need to, but if you want to run them past me, more than happy to look at them. SNAG, SNAG. I like that one. And SIL is another. These are the ETFs. Oh, no. Okay. I thought that might be an ETF with the 4-letter code. It's not. Doesn't look as good as the other ones. Doesn't mean it can't go, but if it hasn't gone yet, and it's a silver stock, somebody will go, oh, well, then it's bound to go. And I go, there's a reason why it hasn't gone. SIL Micro Silver Futures and Global Silver Miners ETF. Maybe that's a way to play it, another different way to play it. So just going for a basket of silver stocks rather than trying to pick the right ones. But this one will, I think it'll largely be capitalisation weighted. So it's going to be more weighted to some of those bigger ones that I just showed you as well. So we're just spitballing ideas here if you want to bang your head against the silver brick wall. ARD obviously is a local one. That's an Aussie one. Argent Minerals. Again, it's a bit like that other one. You know, it hasn't gone yet. There's a reason why it hasn't gone yet. Because its assets are rubbish. Okay. But coal. USL. Looks better than some of the other ones. Yeah, I think I had that on my list today. MMA. Mixed Martial Arts Group. Or Maronan Metals. Not as good as some of the other ones. Peter's saying he's put a bunch of them on the Facebook, the Live Market Analysis Facebook group. What's that one? Vizsla. Vizsla. Okay, Vizsla Silver Corp. Yep. Nice. I like that one. Yep. Good. One more, otherwise we're going to be here all night. S.C.Z. No. Maybe I've got it wrong. S.C.Z. on the TSE. Oh yeah, there we go. Santa Cruz Silver. Good. Yeah, I can definitely see that one developing. And MTH is a local one. Mithril Silver and gold. No, there's a reason why it hasn't gone. First Majestic, yes. That's a big one. What's the code on that one? I don't know the code on that. First Majestic Silver Corp. There you go. AG. Well, bloody hell. AG. There you go. Like that's where else are you going to go? It's like Barrick Gold is GOLD. Well, there you go. Yes from me. Very good, everybody. That's why we come here on a Monday night to share ideas. Let's go back up the list and do the rest of those US and North American ones. And we're going to go to ARMN. Aris Mining, which might be a silver one too. Very solid. No complaints here. Great looking chart. Fine on the weekly as well. Wonder what's going on here. Reconstruction perhaps. Capital. I don't know, some sort of capital event. Anyway, not too fussed about it. Heading back here, it's fine. It's perfect. Better than fine. And yeah, today's candle I'm not too stressed about. I wouldn't worry about 15 as a round number. Worry about 20. So equals R or plus R on the next demand side candle. It's a yes from me. And we're going to HSTR, which is also on the TSE. I'm guessing either silver or gold on that one. Yes, also. So just a ditto. Let me double check the longer term points of supply, not in play. So equals R, if you happen to have it, there's no reason based upon that last candle to sell. It's not here any round numbers. And plus R if you don't, and you are looking to add risk next demand side candle though, please. Save. Thanks for those, Peter. Let's go to CBE. I think I did that one for you, Andrew. Up the list, HAV we definitely talked about, and this is Haraju, and Ramsay Healthcare. Yes. I do want to talk about this one. It didn't make the feature list today, and you'll see why. I still think it's not quite a feature, but as a turnaround setup, yes. So we actually do have today was, and the reason why you haven't seen it in prior to today is a very good reason. Look, there's a few in there. I'm not going to draw them. Just bear with me. I just want to draw that because today is officially with the higher high and the higher low. It sets this point here as a point of demand. And it's the first time in a very long time that the long-term trend ribbon has behaved as a zone of dynamic demand. So it hasn't occurred really. When was the last time we saw a trough above the ribbon? Not even through here. Last time we saw a trough above Ramsay Health Care's long-term ribbon, not even there. Not even there. And I'll pay that one. I'll just pay that one. Certainly I can pay that one. So 2023, the start of 2023, and we're going to be nearly 2026. So it's been nearly 3 years since we've seen a trough above the long-term trend ribbon. So yes, for me, a little bit aggressive still. I mean, obviously it's in the process of turning around, and we saw what it did last time. This is a serial bad news deliverer. Okay, so if you like that sort of stuff, it's a plus R for me. Vote of confidence. Equals R if you've got it for the first time in a long time. But I'm glad you, Roscoe's saying no, he doesn't like it. It's still early, but it's valid, and the system is designed to allow you to take this sort of risk because it's different. It's different from double greens going up. And often we know that they move, and they move really well because the market can be, after such a long period of time, fund managers can be really underweight these stocks, and then all of a sudden the news turns and they need to get that weighting back. But I'm glad you brought that one up. Let's keep going with the US stocks though. For everybody else, let's go to CLS for Rupam. CLS. Did I save that? I did. CLS. Celestica. Yes, looks good to me. Don't mind at all. Let's head over to the weekly chart. Looks solid enough there. There's been a bit of supply around, but it's been a really bad market. So I don't mind it. I'm not rampaging, frothing at the mouth over it because of the supply that's still in the system, and we haven't really definitively dealt with it yet. But close enough for me, and I'm not saying that flippantly. I'm considering everything I always consider about these things when I type these letters in. So yeah, I think you can go on that if this is the one you want to go on. Okay, it meets my criteria for a continuation setup, so I can't say no in that regard. Is it the best one? I don't know. I haven't looked at them all yet. How can I tell you it's the best one? Lulu. Will we find easier paths? This one I'm guessing for a turnaround setup. So not a turnaround setup yet for Palm because we're not interacting with the long-term trend ribbon. We saw that on Ramsay Healthcare. We need to be above the long-term trend ribbon for a turnaround setup, but it is potentially an aggressive setup. It still needs a little bit of work to qualify because I'd like to see a short-term uptrend. I think we do have rising peaks and rising troughs. Yep. And we're dealing with this point of supply, and we do have a base pattern. We've certainly had some volume here. I don't have the other indicator on. I'm not going to go there. It's fine. I don't think we need to. I wouldn't say we've had the most emphatic price action signals yet. It's still early for all the reasons. I'm not going to explain to you for the 10th time why that's still too early as an aggressive setup. So go back and watch the recording. If you tuned in a little bit late, we definitely discussed it today. Let's go Deckers Outdoor Corporation. And this is definitely not an aggressive setup. The last one was far closer. This is still downtrend to me. So this is one I'd be more likely to go short on the right candles than to go long at this stage. Not saying that can't change, but at the moment, I've still really got short-term downtrend, long-term downtrend. So, yeah, not sure why we're looking at that one for a turnaround setup because the biggest giveaway is the long-term trend is still down. So it can't be a turnaround setup if the long-term trend is down. At best, it could be an aggressive setup. Perry's gone for CX, which is Cimex. Whoa, that is a ripper. Okay, so we looked at one before, which was CLS. Right, and I said it's fine with me. Not CLS, CLS, Celestica. CLS, not CSL. CLS. So Celestic, and I said, look, it meets the criteria. I think it's close enough, but I'm concerned about the selling that was in the system. Yeah, I know the market went down, but still, that's a lot of selling. Like, why are they selling? Why aren't they true believers? Have we come back up? Are we close enough? We could be closer, but I reckon it's on the side of close enough. Okay. I said to you, is this going to be the best setup we're going to see tonight? I haven't seen all the setups. And then we get to something like CX. And if we're comparing between those two, yes, there was a little bit of supply in here. Well, the market was rubbish, right? But in fact, I should have put this on and then, so everything I've saved is now not going to be in here. Everything I've just saved. You can see all the previous scratchings here. So let's go back to CLS. And, well, there you go. That's easy. I can just copy and paste from before. Okay, click Save. That's handy. And then we'll go to CX, which is in the right place now. And now I do have all the rest of the indicators. Because I wanted to see relative strength. That's what I was missing. And we can see here, yes, it did have a pullback. But the rest of the market was rubbish. The rest of the market got smacked. And we can see the relative strength. This is just invincible. Okay. If we go to CLS, we can see that over the same time, still good. Still good. Well, in this case, it's more through here, isn't it? This is where it's starting to come back up. So more through here. Yep. But not as good. Okay. I mean, it's still good. But we are able to use the indicators to compare and contrast. Right? That's what indicators are there for. Short-term trend ribbon never breached in that last pullback. Long-term trend ribbon impeccable. Candles impeccable, and when I zoom out, I think the other one was fine, wasn't it? It didn't have any problems, but this one certainly doesn't either. So it's just about comparing, contrasting, finding ways to cut through the myriads of opportunities that we're going to see every week to get to a shorter and a shorter list that deserves our risk. Let's go to Perry's next one, which is WELL. And again, impeccable. And we don't do FRP plus 130 anymore, do we? Because we've changed, and I'm glad we've changed. I like this better. I like equals R and plus R. I think that's better. And that'll change in a second, I promise. There you go. So happy with that one as well. And through the round number as well. I thought I'd better just double check these round numbers just in case. A bit more of a supply side presence, but overcome. Okay, but still a bit more of a supply side presence. Solid there. No, that's fine. Supply side presence, $100. Previous point of supply. Yeah, look, starting to make a little bit more sense there. It's fine. Held the long-term uptrend ribbon well. Is it as good as the other one, CX? No, but it's still very strong. And last one, AVGO for Perry, AVGO. So very solid setups here. Again, a little bit of supply here while the market was struggling. Certainly it's come good. Impeccable. Yeah, very strong. And through the point of supply, through 400 in fact. Yeah, I don't know. I think maybe CX is still just edging this one out for me, but very close. We're probably splitting hairs now, aren't we? You're going to get to that point where you just can't separate them, and you have to choose. All continuations, all plus R, says Perry. I agree. We've done that one. We're up to you now, Matthew, and your US one's AGX. Thank you for being so patient. Brilliant. No complaints. Actually, very little supply. 400, but we're close enough to 400 for it not to be a big issue. And really, 500 is the next round number. Impeccable there. So I can't fault this one. And look at the building relative strength comparison. So I said, here, look, a couple of supply candles, but really, compared to the rest of the market, absolutely impeccable. So very happy with that one. So the short-term uptrend ribbon never really seriously challenged at all, was it? It's a picture of excess demand. CLS also noted here. And let's bring it back in because we can see some indecision here. Yes, it's coming good, I get it, but a little bit more indecision. I know we're splitting hairs a little. FTAI. And that's why we make shortlists, so we can easily access these. Less enthusiastic about this one. I think there's just more work needs to be done. I'm seeing more black candles. I'm seeing less demand side control, more supply side interaction. Relative strength isn't as good. A few things need to happen here. That's all. So a turnaround TAP setup. Turnaround. Don't know what TAP stands for. Turnaround. P. What's the P stand for? Setup. Then we had a look last week. Look, it's improved from last week. Looks solid on the weekly chart. I still think there's more work to do here. Yeah. And I mean, this is probably happening because of 200 anyway. So let's just see how it goes in here. You might say, oh, look, I don't want to wait. I want to get in now. Okay, I can't stop you from doing it. But I just think there's enough doubt around that supply zone there to go for any of the other ones we've seen. That's probably the simplest way to put it. I think the other ones deserve our attention immediately, whereas this one might require it in a few, well, it could be a few weeks, couldn't it? Okay, I'm going to scroll down to the bottom and not on the chart, but I hate Ramsay Healthcare. Oh, okay. He just hates Ramsay Healthcare. Ross says he doesn't hate it on the chart. He just hates the company. That's okay. Let's go to, I think I'm done. IVE. Okay, not there. Last one, I promise, only just in the interest of getting everybody's questions answered here. Is IVE, okay, IVE, which is the MSCI Europe and Middle East, I think that is, isn't it? Europe, Asia. I don't mind it. I'm not sure if it's the best one. The best setup out there. It's a little bit sideways at the moment, but a decent trend. If I had it, I could see a path to continuing to own it, but I don't think I'd be aggressively adding to it. Is that the one you're asking for? I can't really tell, Michael, because I'm not on the right screen. Yeah, I'm on the right screen now, but I don't think you missed anything. And you might be giving me something there again. Remember what I said at the start about capital letters, so I don't end up going off on these tangents. Maybe that's LVE, but how the hell am I supposed to know? You know what I mean? So once again, everybody, if you can do me a massive favour by LVE perhaps. Yep, I wouldn't know, would I? So help me out. Okay, on that cheery note, let us, in fact, we're not going to go here. I need to do the disclaimer again. But you know the disclaimer. General advice, seek professional advice. They'll give you incredible insights as to what's appropriate for you, no doubt. Apart from that, ladies and gentlemen, it's been a pleasure chatting with you this evening. If you're wondering about the December schedule, we'll keep going, I think, for at least the next couple of weeks, and then we will take a break, probably through January, just because I think we all should take a break. I certainly need one, but we'll be back next week, same time, certainly Monday night at 7 p.m. Perth time. All the best for your trading and investing. Until then, bye-bye for now.